All right, let's move away from that then and put the spotlight on what's happening with Electronics Mart. Talk a little bit more about their FY25 business outlook. We've got with us Premchand Devarakonda, who's the CFO of Electronics Mart. Thanks so much for taking time out. To begin with, let's understand what exactly have been the sales in the summer months. What kind of growth have you achieved from March to the month of June?
Very good morning to you. Thank you very much for having me on your show. This quarter is, I think, this is the quarter for the cooling products because of the hot summer across AP, Telangana, and NCR. So the air conditioner sales and cooler sales have been quite impressive. So there is going to be definitely good contribution coming in from the categories like coolers, air conditioners, and then refrigerators.
Right. But is there pricing uptick as well? Because, what we hear from channel checks pretty much across the country is that there's definitely that supply pressure as well. And it seems like people are willing to pay any price to, get their hands on a cooling instrument. What about pricing at this point?
See, there is no substantial increase in the pricing, but the demand has gone up drastically as compared to the last year. So there is, in fact, shortage of supply in the market. So those who are sitting on the inventories, definitely they made good fortunes out of this opportunity.
Talk to us about, I was just looking at your numbers, Mr. Golconda, and I've seen that your revenues have doubled in the last 4 years, and so have your absolute EBITDA levels. If you are making a scenario that the demand supply remains in your favor, and things are looking so grim at front that there's a big gap in there, will this time round your revenue double in lesser time, say 3 years, and what will the EBITDA mix be like?
It is something like too optimistic thinking. So we cannot double the top line in the next 3 years. I think it is quite impossible, I would say that. So, but we can improve on the margins by introducing the latest products and technologies. So where we can definitely improve the margins.
Your 3,000 crore, 3,200 odd became 6,300 in 4 years. Next 4 years, what kind of growth CAGR is a fair estimate in your view?
See, our long-term plans are based on an estimate of 15% year-on-year growth by adding at least 25 stores year-on-year. So this is how we have been projecting our business plan for the next 4-5 years.
Okay, but as you were saying that this growth will come at better product mix and hence your margins go up. Is that correct?
Yeah,
for last 4 years, it have remained in the range of 6 to 7%. Do you see 8 or 9 coming in?
8 and 9 is too optimistic.
Okay.
So let us be conservative in our estimate, and it will be between 7 and 7.5. That is quite possible, and we are on the track.
Okay, fair enough. Those are some of your targets down the line. But what about other regions geographically? Because you're very concentrated in South India. Will you look to expand your geographical presence?
Yeah. See, a couple of years back, we expanded to NCR, and we are further expanding to the peripherals of NCR. That means Western UP and Haryana, GT Karnal belt, and also we are looking at Uttarakhand as an opportunity, and then Odisha is another market which we are exploring. But these plans will materialize over the next 1 or 2 years.
Okay, fair enough. That's the view when it comes to your overall geographical. And what about the outlook when it comes to inventory, the inventory stocking, the kind of turnover rates? What is it that you're seeing across categories? What is it that you're seeing across regions?
See, when we look at the company level inventory churn, see, the large appliances will normally have the lesser churn, like 5 to 6 times churn in the financially in any year, and then mobiles and smaller accessories will have the better churn. That means the inventory holding period will be between 30 and 35 days.
Premchand, before we let you go, up till now your same-store sales has been around 8.5%. For FY25, you are expecting it to go to 9% or thereabout. Do you stay on that guidance of yours?
Yeah, we are targeting to improve on that. So SSG will be around 9%. That is quite possible.
We'll let you go on
But
that.
here I would like to emphasize one important point.
Please go ahead. Please go ahead.
What we are doing, like we are what you call cannibalizing our stores by opening stores in the near vicinity. So that is normally will impact the SSG. So in fact, to take the customer traffic, to reduce the customer traffic on a particular store, we are opening the store nearby. So that is another reason why we may not see what I call more than 9% SSG coming from the established markets. Whereas in the new markets, we are definitely going to have double-digit SSG coming from those stores.
Okay, interesting there. You've run us through a lot of your key parameters and targets for Electronic Mart. So thank you so much for that.
If you like this video, then like, share and subscribe to ET Now.